Greetings all, we are from Group 9. Our presentation today focuses on 5 public listed companies on Bursa Malaysia. We review the background of these companies as well as their equity composition, deferred taxes, leases, financial assets and financial liabilities from the financial statements and notes to the accounts. We also evaluate whether the disclosure provided are sufficient to help users understand the key items. These are the 5 companies in our analysis. As you can see, all the 5 companies operate across various industries, ranging from consumer products to technology. For equity, all 5 companies consist of share capital, retained earnings, earnings per share, and dividend. These items are clearly analyzed in the figures presented. Next, I'll discuss the dividends distributed to shareholders. We can note that OIB subsequently increased its interim single tier dividend to 5.5 cents per share in 2024 from 5.0 cents in 2023. This increase was supported by a significant 92.5% rise in cash and cash equivalents, mainly from billings related to housing projects such as the Aman Residence and SP Sarjana Permai. Therefore, it shows that OIB has consistently maintained a healthy dividend payout to reward its shareholders after considering its performance and future investment needs.
Next is about the deferred tax. Deferred tax arise from temporary differences between carrying amount of the asset and liabilities and their tax basis. The subsequent measurement is using a netted tax rate and updated at each reporting date, with changes recognized in profit or loss, other comprehensive income, or equity. Under MFRS 112, there are 2 categories of deferred tax. First, deferred tax liability, DTL, are recognized for all taxable temporary differences, except those arising from the initial recognitions of goodwill or certain non-business combination transactions. Second categories are deferred tax asset, DTA, are recognized only when it is probable that future taxable profit will be available to utilize these differences. According to this graph, we can see the data age bracket recognized 0 DTA or DTL due to continuous losses and limited future taxable profits. The tax losses can only be carried forwards for a limited period, which is 10 years in Malaysia. The unrecognized DTA is disclosed only in the notes. In contrast, Oriental Holding Berhad recognized the highest DTL mainly due to its large asset base, which creates substantial taxable temporary differences, which the accounting value had large differences with tax bases. The Oriental Holdings Berhad also disclosed a large amount of unrecognized DTA, mainly from tax losses and reinvestment allowance.
Lease, which is a lease, is recognized when a company obtains the right to control the use of an identified asset for a specific period in exchange for payment in accordance with MFRS 16. At initial recognition, the companies record ROU asset and also lease liability at the commencement date, measured based on the present value of future lease payment. During the lease term, the ROU asset is depreciated while the lease liability is measured at amortized cost, with interest expenses recognized in statement of profit or loss. Company may also apply recognition exemption for short-term lease and also low-value asset, where the related lease repayment is directly recognized as expenses. For the financial year 2024, our analysis shows that Oriental Holdings Berhad record the highest amount of ROU asset and also lease liability, while Tata H Berhad record the lowest among the company analyzed. By the nature of principal activities, which is Oriental Holding Berhad is actively involved in automotive-related businesses, particularly motor vehicle distribution and also dealership operation. For example, the group operates car showrooms, medical centers, and also administrative office, such as automobile showrooms located in areas across Malaysia, including urban locations like Kuala Lumpur and Penang. The showroom and medical centers are typically operated from leased premise due to their strategic location, resulting in significant long-term lease commitment being recognized under MFRS 16. In contrast, Tata H Berhad mainly focus on investment holding and technology-related supported services, which do not require extensive physical asset. Most of its operations can be conducted using minimal office spaces and do not depend on heavily leased properties or long-term operational facilities. As a result, Tata H Berhad have fewer lease arrangements, leading to lower recognized ROU asset and also lease liability.
Now, let's move to financial asset. Financial assets are contracted rights to receive cash or to exchange financial asset or liabilities under favorable. It can be classified into 3 categories, which are amortized cost, fair value through profit or loss, and also fair value through other comprehensive income. However, there are different treatment for the transaction cost for each categories. For subsequent measurement, amortized costs do not recognize fair value changes. Meanwhile, fair value through profit or loss recognize fair value changes in profit or loss. And the last one, fair value through other comprehensive income, recognize fair value changes in other comprehensive income and reclassify profit or loss upon the recognition. The graph shows the financial asset across 5 companies in the year of 2023 and also 2024. Based on the graph, we can clearly see that Oriental Holdings Berhad has a significantly large amount of financial assets. This is because Oriental Holdings has purchased equity investment in several sectors, such as consumer product, financial services, property, and others. Meanwhile, Tata H Berhad Tedan Group Berhad and Oriental Interest Berhad shows a significantly smaller amount, as they do not have other investment and are involved in less diversified sectors.
This is the financial liability graph for the 5 companies for the years 2023 and 2024. Based on the analysis, each company shows a different level of financial liability exposure. OSK Holding has the highest exposure because it considers not only financial risks such as liquidity, market, and credit risk, but also non-financial factors like health, safety, and the impact of climate change. Claden Group is more focused on credit risk as it recognizes financial guarantee contracts at fair value and measures them according to the relevant standards, mainly dealing with the risk of third-party default. Tata H. Berhad has the lowest financial liability exposure because it maintains sufficient cash and bank facilities to meet its obligation. With exposure mainly to credit, liquidity, and market risk, Oriental Interest and Oriental Group provide more detailed disclosure covering credit, liquidity, market, interest rate, and fair value risk, with Oriental Group offering the most comprehensive disclosure overall. Now let's go to our opinion. All 5 companies provide reliable information as well prepare their financial statements in accordance with MFRS, ensuring consistency, comparability, and transparency in deferred tax, lease, financial assets, and financial liabilities. Claden Group Berhad is the easiest to understand, using clear tables for deferred tax, separating ROU assets, and directly classifying financial instruments. OSK Holdings Berhad provides detailed information like fair value hierarchy, maturity, and aging analysis, and full ROU movement, making it complete but harder to grasp quickly. Overall, all companies provide sufficient information including risk disclosures on credit, liquidity, and market risk, helping users understand both their financial position and potential challenges in the sector.
In conclusion, all companies consistently apply MFRS in relation to equity, deferred taxes, leases, financial assets, and also financial liabilities. The recognition and measurement of the item comply with the relevant standard across different sectors. Furthermore, the information is clearly presented in the financial statement and accompanying notes with disclosures and also enhance users' understanding of the financial impact across sectors. That's all from us. Thank you.